Good evening to all of you. Welcome to today's webinar. Today we are going to look at overseas funds, investment in overseas funds. We have already seen investment in Indian mutual funds as well as Indian ETFs. Now we are going to look at other opportunities, that is the opportunities which are elsewhere. So you can compare and see whether you can get some better returns there, or probably diversify your portfolio along with Indian equities and mutual funds, because normally when you have investment, you have a diversification from individual equities to mutual funds, ETFs, probably also in gold ETF, silver ETF also is there, some sprinkling of overseas funds. So in that, let us look at which overseas funds really are giving excellent returns, and where probably you can look towards taking your investment too. Now there are many overseas mutual funds there. I will list out some of those. I will show that. But in that, the top ones are Mirae Asset, FANG plus total return. This is that one amount which is there. Okay. Then we have got a NASDAQ fund. There are some in this you can have Motilal Oswal NASDAQ fund. It is also an ETF. This is also an ETF. So these two are exceptionally performing ETFs. So you can buy like a stock itself, and then probably do SIP also there in Mirae Asset FANG ATR total index plus a NASDAQ Motilal Oswal fund, which is I think listed as MON 100. So listed in the script code is MON 100. Generally, if you look at this, the composition of this indices, NASDAQ 100, it contains some of the top tech stocks like Apple, Nvidia, Microsoft, Google, Amazon, Tesla, Facebook, Netflix. So it contains those companies and also other companies also which are there in the NASDAQ 100. Mirae Asset FANG is more concentrated fund. It has the top 7 to 8 stocks where the weightage is very high. For example, some of the stocks which I mentioned to you like Microsoft, Nvidia, Google, then Facebook, Tesla. So these type of companies, they give Apple, Netflix. So these are the companies which are there, the high concentration as far as Mirae Asset FANG plus total return index. Then of course in Mirae Asset itself we have got straight away to artificial intelligence. There is a fund which is concentrated, but these are all very sectoral funds, and probably you are prone to getting big shocks in case if things don't do well. But right now, if there is a feeling that AI is going to do very well, but there will be some regulations, but AI going down forward, AI is going to do well, then probably this fund also is likely to do well. So these are top performing, already performed and over a period of time, not only here, but over a period of time. So these three things we will see in the graphs itself, particularly the Mirae Asset FANG, Motilal Oswal fund. Then of course, in SIP also you can do Franklin Templeton US feeder opportunities fund, and in this you can do SIP, US Franklin Templeton US feeder opportunities fund, you can do SIP. Okay. This also has done excellent returns over a period of time in the form of SIPs if you do an SIP. But I'm not sure whether they have bet any big indices like S&P 500 or Russell, which are the important indices there. So in US, if you see, you've got the S&P 500, which is a very important index, then NASDAQ Composite Index 100, then Russell, this is a more of mid and small cap, but very diversified, Russell 3000. So these are three important indices. Okay, so we can take an exposure directly in NASDAQ 100 in the form of Motilal Oswal NASDAQ 100. If you want a more concentrated stock investment, then you got the Mirae Asset FANG. Then much more sectoral and thematic, you got the artificial intelligence as far as Mirae Asset is concerned. Then we have also got the Russell 3000. So some of the exposures come from Franklin Templeton US feeder opportunities fund, and if you take SIP over a period of time, then this has also given very good result. Then besides this, we have got ICICI Prudential blue chip, US blue chip fund is there, but not US blue chip. So this is another MF. This is MF. This is MF fund. Then of course you have got there are many funds. DSP flexible fund is there. So this is DSP flexible fund is there, and there are many other funds. I will just go through that, show the list there. So these are things, and in the ETFs which I told you, there is one more ETF called Hang Seng ETF. That is Mire said, I got an Hang Seng Tech ETF. Tech ETF. So this has performed well in the last 1 year, but last 3 years performance is not good. So Hang Seng Tech ETF. So there are MFs which are also linked with. We have got ETFs which are linked to Hang Seng Bs. So like the Nifty Bs, you have got a Hang Seng Bs is there. There are mutual funds which are also looking at emerging markets. Then you have got a China fund. Then you have got European opportunities fund is also there. So across the board, you have got a possibility of investment. But if you look at what are the things which you can do really well, that is see these are so you can have a look at it. Motilal Oswal Nasdaq 100 Fund of Fund. 1 year return is 47%, 3 year return is 20.5%, and 5 years return is 25.73%. I think it has bet all our indices, except maybe for the small cap fund in over a period of 3 years. I think this has given excellent results. So Motilal Oswal Nasdaq 100 as fund is a very good delivery fund which has done very well. Then scrolling down, there are what we are doing is even 3 years return should be good. Coming next to the category, I think we have got a Invesco India Global Equity Income FOS. So this has also done well, not as great as Nasdaq fund, but still this fund has also done well. Then let us scroll down. If you look at it, it is one which has done over a period of 5 years. So I think not many stocks. 5 year return not great in many this one. So Nasdaq, if you look at it, 30.79%. Nasdaq here also, if you look at it, is also 31%. So Global Innovation Fund is also doing well. Here let us look at Edelweiss US Technology Fund again has done well. So most of the technology funds, Navy US total stock, this has done well. And this is Bandhan US Equity Fund of Fund Direct Plan Growth. So this has done well. 3 years return is done well. So we can look at Bandhan US Equity Fund of Fund also. So that is also done well. And Kotak again Nasdaq. So Mirae Asset Global, this has done well. So this is what I was telling. Artificial Intelligence Fund, 32.07% it has given. But it's a recent one. This is a 1 year return only. I think probably so. This has not much of a thing, but Nasdaq fund itself has done well in that 1 year. So I think Nasdaq itself, because it is a much more diversified thing. So the first exposure that you should take is, of course, the Nasdaq fund. So I think that is the safest. Then probably you can also look at, I'll just show you Franklin India, this is US Opportunities Fund, feeder fund. If you look at Franklin India feeder fund. And what they have given is this is what the statistics given by them. So if you do an SIP, that is the SIP return, then potential returns for the value of your investment. So last 1 year, 3 years, 5 years, 10 years, they have returned. So if you do a 10,000 rupees over a period of 1 year, so you have got 1,34,000. So 1,20,000, 1,34,000 is 14,000 rupees. 14,000 rupees around 11-12%, but it's a 6 month, right? So it's a midpoint. So that has given a return of 22.49%. So if you do a last 3 years, it has given 23%. Last 5 years, 15.28, and last 10 years is 15.5%. So over a period of time, if you do an SIP in this, I think it has definitely delivered a 15.5% growth. So we don't have a stock which is more of the Russell 3000 growth index. So in fact, Russell Growth 3000 index has done much better. It is like our small cap, mid cap stock. I don't know. I'm not very sure. I've not come across any funds which are exposure to Russell 3000 growth index here. Maybe it may come in the future. So this particular one is also good, and probably we can also we can even look at the Motilal Oswal Nasdaq itself over a period of say 3 years, 5 years. You can look at the returns performance of Nasdaq. Let us look at Motilal Oswal Nasdaq ETF. Okay. Let's see whether they are able to give the performance here. Okay. Okay, right now the CAGR they have mentioned as 28.55%, and Nasdaq 100. Okay. SIP, we are not able to see the SIP here. Okay, so we will look at it again when we get that. Probably can put this here. Motilal Oswal Nasdaq 100 SIP. So if you look at it, the 1 year return, problem in money control. So we'll see. Okay. Now if you look at the last 3 years return, annualized return is 17%. 2 years is 39, 1 year is 30, 5 years is 23, 10 years is 21.54. Since inception is 23%. So one of the best, I think. And if you look at the annualized return, SIP return for a period of say 3 years, if you have done that, it has given 29%. So 3 years, it has given 29%. 5 years is 22%. 10 years is so very consistent return. If you see the annualized return for an SIP, if you do, okay. So every month you do this, then you get something like 30% return is what you get. It's a fantastic opportunity for you to invest, particularly in very high growth stocks, because it contains the world's top tech stocks as well as other stocks, which maybe it may even include like for example Tesla, probably some of the pharma companies, some of the consumer discretionary companies. So it includes all those companies also. And so it's a Nasdaq 100. So it's not only the first 10 or so. So it's a 100. Now if you look at the Mirae Asset FANG fund, okay. Now let's look at Mirae Asset. FANG plus ETF. This is not giving the proper one. Okay. Mirae Asset FANG. Let me see where it is right now. Probably not able to get exactly that particular code here. Okay, so we'll get back as soon as we are able to track that this one. And Okay, we've got the monthly chart. Let me put the monthly chart. So you're able to see the monthly chart as far as Mirae Asset Bank Fund. So it's a completely parabolic rise, and particularly if you look at the 2023, it shot up from 30 to 135. So almost last 2 years or so has multiplied into 4 times. And last 1 year performance has been extremely great. Now, if you look at the December period, closed at 136, and last December. It was 73, so almost double. So it was a return of 70-80% in this particular year. So not necessarily that should be maintained, because some of the scripts which contains that in that FANG, like NVIDIA, I think the parabolic rise in NVIDIA has resulted in this. So we need to be a little bit careful. But so these type of high return and high risky concentrated funds require definitely an SIP. In the case of NASDAQ 100, I think you can go for SIP. At the same time, you can also look at buying in a greater dip. Now, for example, Motilal Oswal, we will look at the MON 100. N100, I think, yes. Okay, so N100, we are having this is a monthly chart. In the monthly chart, if you see, there is also a parabolic rise as far as NASDAQ fund is also concerned. But this also definitely requires more of an SIP. But see, if you look at it today, I think 1 or 2 days back, it came down to 187, 188, and then 204. Normally, except for this time when the interest rates were increased, now it's a question of whether they're going to cut rates or maintain the rates. So now if you see, this is 175, 142. So 30 rupees, approximately you get something like 18 to 20% fall in a bigger correction. So if you maintain the same thing here also, 18 to 20, 18% or 20%, so approximately a 40, which is the 178 to 180. I think that's where probably a little bit on the upside. But maybe 180 levels is a possibility. And if that comes, then we can definitely look towards going there. Now, for example, this is N100, so we can straight away put the NASDAQ 100 itself. So we'll know where to go for an investment. NASDAQ 100. So this is NASDAQ 100. This is a monthly chart, and let's look at the weekly chart. So weekly chart is like this. So still generally there is some softness which is happening in this, and we have seen some sort of a fall coming from this level, that is from 221 to 205. So some 7-8% fall has taken place as far as NASDAQ NDX 100 is concerned. So we could probably see some more fall, and that could take it down to this level, 184, 185, and probably 198 to 185. So if we take a 15% fall from here, so it should represent something like 30 to 35. So we should get something close to 190. A better level will be closer to that. Somewhere around this level, I think, or we can put a bigger retracement levels for this, which is the Fibonacci retracement. So let's try from this. So this comes closer to 192, 61.8%. So a very level which is closer to 192, we can start investment, because in US, unless S&P falls by more than 10%, probably a fall more than 10% generally doesn't happen in a bull market as far as US market is concerned, S&P. If there is a 10% fall in S&P, we may get something like 15 to 18% fall in NASDAQ, because it is a higher volatility index compared to S&P 500, which is much more broad based. So expecting sometime the 10% fall itself doesn't come that frequently. It comes only once in a few months. For example, let's say US 500 if you put. Now this is the US 500, S&P 500. Now how many times, see if you look at this particular period which is in July, it came down from 5669 to 5119, 500 points, which is approximately the 10%. So there was one occasion here, and so ever since in 2023, okay, that is almost now 1.5 years back, it had a slightly bigger fall. That is 4600 to 4100, 500 points, which is the 10 to 12%. So generally in this entire move, after the interest rate increases are over, ever since it started to move up from 2022, 2022, which has now taken more than 2.5 years. If you look at the fall, it is this is 4200 and this is 3800. So again a 10% fall. So there are occasions where probably we have had 1, 2, 3, 4 times, 1, 2, 3 times only we had a fall in the last 2.5 years of a fall of around 10% in S&P 500, which would have translated to Nasdaq of 15 this one. So normally we don't get more than 10% fall unless there is a bigger problem developing. So even if you look at from the post-pandemic, from 2020, there was a fall which is not more than 10%. Even here if you look at it, so for nearly 2020 2021 end, so from 2020 March 2020, so for almost 1.5 years or for more than 1.5 years, the fall was just confined to getting a fall of even 10% fall. For example, 4500, 4300. So 40, you're not even getting a 10% fall during that particular period. So in a bull market scenario, S&P falling by more than 10% generally doesn't happen. So here if you look at it, this is 6000 and odd, so maximum it could probably 600 points could be something like 5400, 5500. So if you get in S&P 500 closer to the 5400, 5500, there will be two opportunities as far as investment in US. One is the Nasdaq fund straight away. Equal at that point of time, when S&P 500 is closer to the 10% fall, you can invest. The second alternative is you can also look at Franklin Templeton US Opportunities Fund at that point of time for a lump sum amount. Now we do not know whether you will get a 10% fall or probably the rise will start happening. The only way that you can do is till such time you get a 10% fall in S&P 500, you do SIP. So you keep doing some SIP. So when the fall takes place by 10%, you do some lump sum amount. So both will help you, because one lump sum amount at lower level plus a consistent SIP for 3 years to 5 years will also translate into a good profit, which could be around 25% yearly return. So if you are looking something like a return of 25%, and you are looking at a diversification from the Indian funds, then in that case you have an opportunity which is in the Nasdaq fund as well as in the Franklin Templeton US Opportunities Fund. Then the much more riskier but very rewarding is the FANG fund, which I told you, Mirai Asset FANG fund. Whoever is willing to take that sort of a risk can do that. But in case if there is a fall there, so you have to look at some percentage of fall and keep adding it rather than shying away from it, because it also contains some of the top stocks like Apple, Netflix, Nvidia, Tesla. So some of these top companies, because of their very high valuation, can probably stagnate or probably can come down if the results are a little bit disappointing. Okay, so this type of parabolic rise is difficult to sustain. So that's a disclaimer. So you can wait for a fall before entering into the FANG fund, or you can do the SIP there. I think the Mirai Asset Artificial Intelligence Fund, I'm not very sure whether it is there as an ETF, but let's see whether Hang Seng Tech ETF is there. So let's look at the. So this is the Hang Seng Tech ETF. This is another exposure that you can take. but this is a very choppy one because it's also got a lot of exposure, but more into Asian tech companies, if you look at the overall return, if you look at from 2022, it's almost a nil return. But if you look at from 2024, 2030, it's got fantastically well. Okay, so I wouldn't say this is as safe or as good as Nasdaq 100 fund, but just to show you that there is some fund which is concentrated on Asian thing. You got the Nasdaq Tech ETF is there. Now, as I told you, now we will look back at the other funds which are there. Okay, now this is DSP, US Flexible Equity Fund, and Franklin India and DSP equity funds, between them, I think Franklin India feeder itself has done well. So I think DSP has not bet anything much significantly above that. So Franklin India is another thing that we can consider. Now, anything which is better, I think, if you look at it, I think, so that whatever we return, we should have a good return, not only on 1 year basis, but 3 years basis and also 5 year basis. Now, Kotak Nasdaq, again, so all Nasdaq funds, of course, or technology funds have really shined. So I think now if you, so anything other than Nasdaq fund, we'll just scroll to see whether there are any funds which can, so everything is Nasdaq. So only Nasdaq funds have done generally very well. Okay, so I think probably, you know, we will not expand ourselves beyond these funds, that is the Nasdaq. So as and when you step outside of the Indian funds, so our suggestion is that you consider the first one as the Motilal Oswal Nasdaq 100 fund, okay, or equivalent to that. There are Kotak, Axis, so whichever you want to do, you can do that. It is like an ETF, so either you can do a lump sum amount and a bigger retracement, or you can also do an SIP. The second thing that you can consider is the Franklin India US Opportunities Fund. So please do an SIP. These two are good to be done. And Franklin then, okay, if you do an SIP, it probably gives you something like 20-21% return. That's what we have seen over a period of time. And Nasdaq also, know whether you do an SIP or do a lump sum, you almost get a 25% fund. Then for those who are willing to take some risk, you can consider the FANG fund of Mirae Asset. Okay, so these are three things you can keep in mind for overseas investments. Of course, then you got a internationally any exposure is generally the commodities exposure, whether you do the gold ETF or silver ETF. And for gold ETF and silver ETF, you can do it in Indian ETFs itself. So I wouldn't say it's an overseas investment, this one, but it's a commodity, but and an international commodity. So it is not confined to anything which is only local. So that way there can be some exposure to gold B. So let's look at the, you've got an ETF itself there. So I think gold Bs, you can Nippon gold Bs, I think gold ETF. Okay. So there are many gold ETFs. So you can look at the gold Bs itself, which is the Nippon, I think, Nippon India. You can look at the monthly chart. So of course, if you look at the gold performance itself, you would have done definitely well. So the last 1 year, of course, a fantastic return. So if you look at the last 5 years return, so 2020 January, so 2020 January is 35 and it's almost 66, almost doubled, which is around 14 to 15% return. That is what even the equity markets would have given. So if you want to diversify, in the last 5 years, it has also given 14 to 15%. Last 1 year, it has done much better than the Indian equity, this one. So let us look at the last 3 years. So we'll go to the 2022 January. It was 41 and 66 now. So almost 24 means 60%. 60% on a 2-year basis itself means 25% return. So gold bees, the last 5 years, last 3 years, last one year, it has done fantastically well. Of course, last 2 years also it would have done very well. So this is, if you take a 2023, it was 48 and 66 now. So 18 divided by 48, approximately it comes to 18 divided by 48, 37%. So approximately 16-17%. So last 1, 5, 3, 5, 2, 1, everything it has done well. Probably last 10 years, I think the result might not have been great. So 10 years means we will move ourselves to 2015. 2015, yes, that was 25 and now 66. So slightly less than 3 times, which means it might not have given a 10% return. Probably around a 10% return is what it would have given. So last 10 years return, I think still it has done well, but probably not as good as what probably would have got in the last 1, 2, 3, 5 years return. So probably we expect that the recent the further growth in this can help over a period of time. So probably if you have done an SIP also, you would have done extremely well as far as pushing a case for higher investment is concerned in this. Now we will look at silver ETF to see, but silver ETF, this is more of a trading one. You cannot be very passive about it. Let us look at the silver ETF. There are many silver ETFs which are available right now. So let us look at the ones, ICICI Prudential Silver ETF. This is a monthly chart, and probably we have only for the last 2 years or so. So 2024, you got 73 and now 90. So 17. So approximately 25% also in the last 1 year. And the last 2 years, but for last, suppose if we go back to 2022, last 3 years, okay, it was 863 and 90. So 90 divided by 63, you get absolute returns 42%, 42%. So maybe 12.5% to 13%. Last, so it has not definitely bet gold. So I think when you compare between silver and gold, I think better you can still stick to gold itself. And the recent trends probably could point out to higher returns because of the central banks buying, and that is anybody's game, because we do not know whether they will continue that, or probably we can see some sort of a cooling in gold for a period of time. So let us wait for some fall there also, and or you can do an SIP, but it's not much, it's not risky at all, because I'm sure that you will definitely get a 10% over a period of any time, So now we have seen 1, 2, 3, 5 years, 10 years performance is not as great as it should have been. Probably it will catch up. So these are the investments that you can consider as far as the overseas returns are concerned. So overseas investments are concerned. So before we wind up in the last few minutes, now we will look at the present performance of Nifty index here. So the monthly chart, if you look at the, it is still on a downward trend, and the results are quite big set. Now yesterday Reliance came out with its result, TCS has already come out, Infosys has come out, and TCS after result announcement went up, but it has softened. Infosys plunged around 6% today. HCL Tech result was good, but also fell down, and Axis Bank significantly down. We are waiting for HDFC Bank and ICICI, and then later on some stage SBI to come. So all these things will give us some indication as to where this Q3 earnings are, and which anyway is likely to be either tepid or disappointing, because we have already seen the GST collections not that good, and the previous quarter GDP growth was much lower than anticipated. So these things probably will, and also inflation has been quite high, and also the bellwether companies like Reliance unable to do that extremely well because of the petroleum demand supply reasons. With all these things, I think the HDFC Bank has not delivered a good stock performance over a period of 3 to 5 years period. and they have greater weightages in the indices. So the number of stocks that can pull up the index generally is lower, and also the spotlight now is on Mr. Trump's inauguration, and the focus will be on the tariff policies. With that, I think people will be a little bit cautious, because one is of course the after effect of US tariff policies on global markets, and also the second thing is that of course the union budget coming on February 1st. Probably, considering the present slowdown and slowdown in urban consumption particularly, there is an expectation that probably some IT reliefs can be forthcoming. So if there are concessions on the direct taxes from the government, and also in any significant manner, it can definitely spur the equity markets to go up again, because the positioning also matters. Now the positioning in the indexes, it is already down by 12.5% from the peak. So any disappointing results probably will not drag the index much, because it is not at its high. On the contrary, probably any small, if there is a feeling that yes, markets have already corrected and the valuations have come down for many companies, the turnaround can take place. Large companies' valuations are definitely much better. I think they have all softened to very reasonable levels. The concern is still on the mid cap and small cap, and also the concern is on the governance issues. We have got some news on some jewelry company, so the sentiments can easily get affected because of that, because do not. So when you go for individual stocks, be careful, don't dabble with individual stocks too much. Go with the index, because even if one stock drags down, you've got in a small cap, you've got 249 stocks which can lift you up, okay, or some other stocks which can lift you up. So it is better to still be on the index rather than on the individual stocks. If you want to go with the individual stocks, then probably we have to have a very clear vision that these are literally going to be there, and also these stocks will definitely lead to greater innovation. But at the same time, the price should also become reasonable, because even top quality stocks at a high price will not fetch us any good return over a period of time. So we need to be quite patient even as far as investment is concerned. And there are many times when we get stocks which falls down from minimum 25% from the peak. In a large cap stocks, we should definitely concentrate on stocks which have already fallen by more than 25%. And we are already seeing a lot of nifty stocks going below 25%, including Axis Bank, okay, then IndusInd Bank. So there are many stocks which are already down 25% from the peak. Whether it has to be bought here or whether it has to be bought at a slightly later stage, even if you buy 25% down, and if you average it out going down the level, I think over a period of time you will get the return. Okay, it may not be a short-term result, but over a period of medium term you will definitely get 3 years, 5 years. There is a reasonable chance that you buy at 25% down from a peak, you will get a good result. But there, if you want to see the stock stabilizing and then probably looking towards some momentum on the upside, then you want to go. It is up to the investor to decide. But mid cap and small cap, the chances that there can always be a fall which could be 35 to 40%, or some stocks can even go down by 50%, even much lower. So we need to be very careful about those stocks. Either you have to go with a plan that okay, every fall of say 5%, 10%, you will keep averaging it out, okay. But that also should be confined to stocks which you have a great confidence. For example, if you have mid cap stocks like Massacon Dock, then you've got Bharat Electronics. Definitely the valuations are not good. I mean, like if you say a lot of people value Bharat Electronics around 200, it may be around 270, 280. So there is room for a further fall, which could be 225, 230 and all. So you wait there patiently and pick it up. But suppose even if you have got it at a wrong level, the stock is not going to be extinct. So at some stage then you will come up. Only question is there will be a pain as far as the getting the return back on these stocks are concerned. So you need to be careful, work out whether you want to be like an investor or you want to be like a trader. Because in the case of stock, I think you should be like a trader. You should know when to get in, when to get out. But whereas as far as the MFs are concerned, as far as the individual ETFs are concerned, and broad-based thing like Nifty, Junior Nifty, or some of the ETFs which we have mentioned, overseas ETFs, even the Indian ETFs, which could be a pharma ETF, which could be an IT ETF, it could be bank ETF. So whichever is a flavor of the season, you pick it up I think you can still be there with that, because the fall will be confined to maximum 25% from the peak, generally speaking, as far as the index is concerned. Individual stocks, very difficult to say about any particular stock except for large cap stocks, which we can say to some extent will bounce. For example, top stocks like Asian Paints are down quite significantly. It is more than 25% fall. If you look at now Asian Paints, okay, now I'll put the monthly chart. See, in the monthly chart, it was a 3,600 and today it's 2,260. There's a 1,400 points fall. So 1,400 divided by 36 represents a fall which is approximately 38.5%. 40% down. A large cap stock with a high brand value is down 40% from its peak. So that is because of the valuation. So we have been saying that Asian Paints, despite being good, okay, and growing at a CAGR, that is the profit after tax, still growing at something like 17%, 18%. But even if you put at 17%, 18% growth on a terminal thing and do a discounted cash flow, this stock did not merit 3,500, 3,600. So when the fair value is much, much lower than the actual market value, you need to be very careful. That is what you need to be very careful as investment in individual stock is concerned. You should know where the fair value is, and you should be able to get it from various websites, various softwares are available, which can give you some idea. It's not necessary, because everything is some judgmental factors are also there in everything. But you cannot buy something which is at a very, very high, abnormally high value, 30%, 40% above that. That is where, if you see the Nasdaq 100 fund, some stocks are valued high, but even there the valuations are much better compared to what probably the Indian company valuations are when compared to the profit growth potential. That is where the risk, I feel, in the Nasdaq 100 fund is lower, and it has consistently delivered. So if you look at the fund, then probably in India you can pick up some funds, because over a period of time Indian markets will definitely grow and will give you an excellent return. But at the same time, Nasdaq 100 has not let anybody down over a period of also 15-20 years. So clearly you can look at Nasdaq 100, US, the Franklin Templeton, the overseas investment fund. With that you can add the Indian small cap fund 250, okay, Nippon small cap. Then you have got a flexi cap also, which is good. Then you can look at some of the large cap. So your investment should be concentrated like that. Individual stocks is concerned, just look at the fair value of that particular stock and buy just closer to that fair value, so that you carry a minimal risk. Okay. So with this I am winding up today. If you have any questions, please ask me. Thank you. So you can probably think about this and come back, and in the next session also you can ask your questions, and we will carry forward this discussion at some point in future. Just review what we have said today and look forward for some more investments in these type of funds or in alternate funds. Okay, thank you very much. Good night and happy